Hey everyone, welcome back to Upside Down Data. Today I wanted to talk a little bit about crypto fundamentals in the context of MultiversX. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there. So we're in a definite bear market, right? We've been in that in the whole crypto space, and certainly, EGLD, the native token for the MultiversX blockchain, has been going in a bear market along with it. The all-time high was all the way up at about $560. Now we're trading down at $33. A definite bear market. Things are not going so great. But we know then in bear markets, the things that are more important to pay attention to is more so than looking at technical analysis and worrying too much about that. There's research that we've talked about before on this channel from traditional markets that suggests that fundamental factors are more important in bear markets, whereas technical considerations like doing technical analysis tends to be more advantageous in bull markets. So basically you're more likely to get better returns focusing on fundamentals in a bear market, whereas you're more likely to get better returns in a bull market when you focus on technical analysis. So I'm not going to spend too much time talking about the price of EGLD right now or these possible support lines or anything like that, because the research suggests that, it's probably not useless to pay attention to that, but it's probably not as important as considering the bigger picture. What are the fundamental use cases of the network, and is there any signs that those are positive that might help save price action or lead MultiversX to do well in the future? So obviously with a protocol like MultiversX has, there's tons of things that they're working on. I'm over here on the roadmap on their official website. But there's one that I wanted to highlight specifically, which is one that probably isn't talked about all that much in the context of MultiversX, but I personally think could be one of the more important ones, especially in the nearer term in terms of fundamental value. And that is this idea of X money that they're coming out with, or specifically the companies that they'd acquire. And I'm going to talk a little bit about Utrust here. And this isn't to say that Utrust has realized any of this, but I just want to talk a little bit about what I think could be the story or the thing that Utrust could capture, kind of the market segment where crypto really could act as a bit of a disruptor and actually do things a bit better than the current systems. So if you're not familiar with Utrust, it's basically a platform that's trying to help vendors, help commercial businesses accept crypto payments or digital payments using crypto rails. And then presumably here the MultiversX blockchain would be pretty prominent in this, given that it is owned by MultiversX. And the reason why I think payments is an interesting space is because it's one where very little additional work has to be done from a crypto technological side for it to happen, right? We already know that crypto works well for payments. And beyond just using things like Bitcoin, like the Lightning Network, things like that for payments, you can just use stable coins and you totally wipe out any risk of volatility between when you collect a payment and when you go to redeem it, for example. You can just be using crypto blockchains. You can be using any of these layer one blockchains as a rail to move stable coins around, which then should work pretty well for payments. If you're a vendor, is it really going to make much of a difference if you accept a dollar stablecoin versus just dollars from Visa or MasterCard? Probably not all that big of a difference. And in fact, there's a lot of advantages that companies or business could have for accepting digital assets over credit cards, which is one of the kind of biggest cash alternatives that people use right now. And the main reason for that, and I've talked about this in a previous video, is that for companies, it's actually relatively expensive to take payments as credit card payments, because you have to pay pretty hefty fees on every single one. So the average fee that you're paying to credit card companies to accept payments through them is 1.5 to 3.5% on every single transaction, which is pretty hefty, right? If you're doing that for every single transaction, just think of how much money credit card companies are making. That's how credit card companies are so profitable, or part of the reason, because they're able to charge these relatively large fees. But with crypto, you're not really doing that at all. The gas fee for using a chain like MultiversX is pennies, if not less, for every single transaction you do. It's going to be on average probably way lower than anywhere in this range. And actually technically it's not even the receiver who's paying that; it's the person who is making the payment who has to pay that gas fee. So from the business side of things, it's really a win. You're probably going to be making a lot more. You're going to be able to increase your profit margins by accepting digital payments. Now, of course, with a service like Utrust, this isn't going to be for totally free, so it'd be incumbent upon Utrust, or require Utrust to charge for their services at a rate that's less than the credit card companies are. But I think that should be possible, because the nice thing with crypto is there's no single middleman, right? Except for paying gas fees on the network to move funds around, it's all decentralized. Not having one company that's trying to make a profit acting as an intermediary, the payment rails to move funds from one place to the other. And that's one of the advantages here. So you can imagine that Utrust probably could do this for a cheaper amount than what credit cards are charging. And then, long term, that's something that businesses should want. Now, of course, as I mentioned in a previous video, it's also, things would have to be done to make consumers want to use this instead of credit cards, but I think that might be possible. And one of the other things that I think is useful about crypto as a payment rail over something like credit cards, and this is more something on the user side, is that, now this is a more niche kind of thing, but I still just thought it was interesting to think about, is if you're traveling internationally, if you have experience doing that, many credit cards that are out there will charge you extra to use the credit card in a foreign country. It's not going to be the same experience as in your native country, where your base country. And these can be quite hefty, 1 to 3% per transaction in a foreign country. And that's partly because, the credit card companies having to do these conversions between your local currency and whatever the currency is in the country that you travel to. There's extra fees that can get layered on top. There's just a bunch of fees that can happen that you'll have to pay if you're trying to use your credit card in other countries. Now, there are some credit cards that won't charge you any of these fees, but oftentimes those credit cards, you have to pay some annual amount just to have that credit card. They have annual fees just to have it. And so it's not, generally speaking, free as a consumer to be using these products for those purposes. One of the things we know that crypto does very well is it's a permissionless global network, right? That's what these protocols are. They're global, they're permissionless, which means that if you want to go to a different country and spend something from your crypto wallet, you can just do it. You don't have to go through any middlemen. You don't have to do anything special. You can just do it. And you can also imagine, let's say you were traveling from the United States to Europe, you wanted to be able to spend euros, you could just go on to an exchange. You could just swap some USD stablecoins for some Euro stablecoins, and then put those on a wallet. And then there you go. You're off in the other country. You can spend those Euro stablecoins, and if they have the systems in place to be able to accept that, like something what Utrust is offering, that seems like it is something that people could get behind, and especially if it's made to be more user friendly, where there's not a whole lot of kind of steps that the user has to do to get there, and essentially use crypto as the payment rail instead of these centralized companies like credit card companies. You can imagine that there's quite a bit of profit, or a bit of savings that can be realized by the user and by the end companies that would be worth it for them to cut out those middlemen, which are the credit card companies. Now, I say all this, and this is, obviously very speculative right now, because Utrust is not at that place yet where it is possible for us to just go anywhere in the world and spend crypto. Utrust or any other competing company that's trying to incorporate digital payment rails for companies. But this is something that I see as a use case that is very feasible right now, right? There's no new kind of technology. There's no kind of new miracle, use case that needs to be discovered that crypto is the only unique, answer for. This is a very real and tangible use case right now. And so obviously MultiversX is not the only layer 1 protocol that's trying to do this. I think Solana had talked about some payment type things more recently, Avalanche, etc. So, for me to get super excited about MultiversX specifically and X Money, I'd like to see it starting to win the competition and some kind of focus being put on this to see that. But what I do think is the advantage of focusing on payments in this current bear market is it's something that's proven. We know crypto can do this. We know it can do it really well. We see the opportunity. It's not maybe world shaping, it's not going to be a multi-trillion-dollar thing immediately or anything like that, most likely, but it is very real. It is there. It's a place for disruption. There's an awful lot of money that gets siphoned out by middlemen, especially in the context of these digital payments by credit cards, and they're extracting them from the businesses. And then also anything that has to do with sending money to different countries, there's tons of fees that get extracted. Crypto stands right now as having the technology it needs to disrupt a lot of that. and ultimately to make things cheaper both for the users and for the receiving parties. And I think it's just incumbent upon current crypto projects to kind of see that as it is. You know, it's not the sexiest thing. It's not going to be the thing that's going to make these the next Google probably, but it is there. It's there. It's something that could bring native, realistic, normal, actual demand for these assets. You know, take away some of that speculation as a driver for price action and bring in just demand. You know, imagine if millions of people around the world were using, you know, MultiversX and therefore needed EGLD to use the protocol. Imagine if they had that national demand. You know, it would just be a lot of fees that would need to be paid as people are using the layer 1 protocol that would then start to reflect in the price action. That instead of just requiring speculation to be the thing that catches the price as it's falling, you have some natural demand that sets a floor price. And so that's where when we go back to this idea of fundamentals, you know, versus technical analysis and the importance of fundamentals in a bear market, I think you also have to ask the question, what fundamentals matter? Because a lot of times in crypto, when you hear the word fundamental, people are talking about things that make something valuable within crypto, right? You know, what makes this layer 1 protocol faster, you know, more secure, etc., than another one. And that's all well and good, but right now, crypto doesn't have a ton of real world use cases. You know, people are building them, sure, but I think just anyone who's honest and serious just has to admit that crypto right now does not have a whole lot of real world adoption. It's growing, but it's not at the point yet of something like, you know, the internet by any means. You know, at best you can use the analogy of crypto being right now as it was kind of coming off of the 2000 bubble, where there was a lot of vaporware that was all built on hype, but the real use cases hadn't really been fleshed out yet. And so I think the question we have to ask more short term for this bear market is, what fundamental properties does a protocol have? What things are they working on that can give it value right now in this bear market that have the potential to do that? And I personally think payments are probably one of the places that are most set up for that right now. You know, there's arguments that can be made. You know, I'd be curious to hear in the comments if you have a different opinion. But I think payments are a place where there's a real opportunity, and I'd love to see some of these protocols start to realize it. And again, if MultiversX can do this with X money, and if they really kind of put some focus into it, I think that could do it. Now, we're gonna have to watch though, because there's no guarantee that this is gonna happen. And one of the things I worry about with MultiversX is, you know, given the name change to MultiversX, that, you know, they might be more focused on things like metaverse, etc., and that the payment space might not be as a high-ranking thing for them to be focused on or to be working on. But if they do kind of make signals to that this is going to be a thing they're really going to try to push forward and try to really accelerate adoption into, that could be something that brings in native demand, which then could set the floor and the base for this project to, you know, realize some of the other grander plans they have in the future. But it's my personal opinion, though, that some of those other things, you know, metaverse, anything like that, those are much longer term plays that probably aren't going to yield fruit within this current cycle. I think those are things that are probably going to take a bit longer to catch on at some point. You know, I think, for example, Facebook, you know, formerly Facebook, I think jumped in a little bit too early with that. I don't think the world's quite ready yet. Eventually, I think some of those ideas are going to catch on, but I think see those more longer term plays. Whereas I think this is something where MultiversX could capitalize right now. So of course, none of this is financial advice. You should make your own opinion about this project and about what you think, you know, gives it fundamental value, if anything at all, you know, and whether or not it's worth your time to consider. But this is just something that I wanted to talk about because I do think payments are an interesting fundamental use case, and MultiversX has the, you know, the setup. They have the, you know, the kind of the backbone they would need to start building out this network. Now it's time to see if they actually start to do that. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there.